This is the briefing for Friday, November 4th. Today was really a difficult day. It's just a day of rotation in a pretty wide range in the stock indices. This is the spiders on a 60-minute chart. This is the Qs on a 60-minute chart representing the NASDAQ. You can see we opened up and drove high, or we opened up, drove higher. Then we retraced all of that, put in a slight new low, looked like we were going to break the low from yesterday, and then of course we retraced all of that once again, or almost all of that once again. Same thing happened in the Qs or the NASDAQ. So it's just a difficult day of an up, down, up rotational day. It really was very interesting to see them not be able to break through the low of yesterday. You can see on a 60-minute basis, there were 3 attempts right through here to break through and test this low and take it out. And it actually did not happen. It did in the Qs, but they were unable to continue extending it lower. So basically, we're just paused right now. It appears to me that the indices want to go higher. They're looking for some type of good news to go higher. But the good news just does not keep coming, especially after the Fed announcement and the briefing on Wednesday in Wednesday's trading. One of the things I want to point out again, and I need to reiterate this a lot, this is the, I use the ETFs. This is the spiders again, the Qs for the NASDAQ, and this is the diamonds for the Dow. And I want to point out the intermarket divergences that are existing right now. And you can see in the spiders that we came right up to this 390 area and then held. Really, the important part here is that we had a series of lower highs and lower lows. So this is a downtrend. Then we broke this high in the S&Ps, and that suggested then that this was a run and that this was a pause in a greater degree of time. And this happened to develop into 3 steps, which sometimes, or is one of the characteristics of a counter trend rotation. It happens on low volume. You can see volume declining going into this high. And there's equality a lot of times. It doesn't have to be between the first leg and the third leg. And that's exactly what happened. This trend line here I put up was a projection of where the third leg would end if there was equality with the first leg. And you can see the spiders came right up and hit it and then reversed almost immediately. The Qs really did not make it to that third leg. That 290 area is where the third leg would have been reached equality with leg 1. And you can see also that this series of lower highs and lower lows, that the Qs really barely, if just by a few pennies, took out this high here. So I'm not really sure that this is really qualifying as a greater degree time and price counter trend rotation to this run here, but it's yet to be seen. A couple keys here that I want to get to as well. And you can see the Dow traded through this high, which is the same relation in price development to these 2 highs. And then, of course, it just really spurred substantially higher. And it's holding up a lot better than the other indices. You can even see in today's trading, we really didn't have a whole lot of movement in today's trading in the Qs or the spiders other than that rotational pattern. And the Dow really had a pretty decent day to the upside, as you can see. Now, one of the things that was occurring, you can see going into this high, you can see that breadth was diverging and diverging pretty dramatically. Same thing with NASDAQ breadth. It was diverging pretty dramatically. And it continues to decline, although we did have an increase in today's trading, not very strong, 1,300 shares in the NYSE and about 793 in the NASDAQ. But what is important here is the fact that when you have these 3-step counter trend rotations, the low of the second leg, this leg right through here, is pretty important. And that low comes in right around the 363 area. Now, if that's broken, then that increases the probabilities that you're going to test the beginning of leg 1, which would be this low right here. The spiders have not done that yet. They've approached it, or they're not too far away from it, about 7 points away from it, but really have not tested it. Now the same thing in the Qs. you can see this area comes in right around the 267 area, and it has broken it, which increases the probability now that the NASDAQ is going to test this low. Now, that's not 100% certainty. There's, a probability assessment that I've put on it that it's about 70% probability that we're going to test that low, but there's a 30% probability that we will not. And what I have to do in the coming week is try to determine from my own trading is that 30% probability going to increase and become the 70% probability, and testing this low through here, the 30% probability. So there's a lot more information the market has to give us before we can really determine what's going on. We do have these intermarket divergences, and that suggests that it is a market that is not completely healthy. But we never know how intermarket divergences are going to be rectified. We could see a spur to the upside and see the Qs and the spiders catching up with the Dow, or alternatively we could see the Dow just completely collapse and catch up with where the Qs and the spiders are. But it does tell us that something is not healthy within the indices themselves. So basically for next week, what I'm going to be looking for is I'm going to be looking to see for yesterday's low to get taken out, and then to see the low from, this is the 13th of October, to get tested and taken out. I'm looking for today's low and the Qs to get taken out, and to see the 13th low tested and taken out as well. And then for the Dow, what's going to be important is the low from yesterday. That's going to come in right, I'm sorry, these are the diamonds. That's going to come in right around the 316, 317 area. And then that would bring in the next level of support, would come in right around 305 in the diamonds. Now, one of the things that we need to pay attention to is what happens with market breadth and what happens with volume. And you can see even on this move higher in today's trading, volume fell off pretty dramatically. So looking at where we are longer term, you can see this three-step counter trend rotation in the spiders, testing the 390 area, then coming back down and testing this 373 area, 374 area in the spiders, which goes all the way back to this time frame, back through here. And then of course, if we were to break through this 363, 364 area, that's going to open up the potential to test this low, and that would open up the potential for another leg lower. And you can see breadth recovering somewhat more today on a daily basis. NASDAQ, basically the same situation, really not the three-step counter trend rotation, not really making it up to the 290 area, which was where equality would have been. A little bit of a pause here for 4 days of trading, then a breakdown of that pause. And of course, it's going to be very interesting to see whether the Qs are going to be able to trade lower in Monday's trading, and potentially lead the other indices lower. Next upside resistance is going to be 270, 278 area in the Qs, up to about the 284 area, which is the high from this day here. And then in the Russell a little bit different. Really didn't have much of a three-step counter trend rotation. It was really more of a pause, and you can see the rotational aspect of that. Broke out, tried to attempt to move higher, and then of course traded back through support, and now rotating just right at that level. This is today's trading right around this 178 area in the IWM. Where we are in terms of overbought and oversold, approaching slightly overbought in the NYSE. NASDAQ is neutral. Really not a whole lot going on in terms of the overbought and oversold condition. Really not giving me a good indication as to whether we're going to see a good move in one direction or another. Market really could go in either direction. We are paused, and there's really not a whole lot more to say about it, that we are paused in this area right through here. And until we see a substantial move or a breakout in one direction or another, I still think the higher probability is we're going to see lower prices. I think the psychology of the market going in today's close is still looking for any good news for investors and traders to buy this market. But if there's any bad news, I think the selling will will begin, and we're going to see lower prices. Honestly, I was talking to somebody today during the trading day, and I said, I'd really just like to see this market puke up everything, and just vomit out stocks and finally get this over with, because I think it's going to open up a tremendous buying opportunity. We may not get that. I've been kind of waiting for that for a long time. I really thought that we would see, when we tested this low right through here, I thought when this started we would see that happen, but it didn't. But if and when it happens, we're potentially going to see a tremendous buying opportunity. If it doesn't happen, we'll begin to see the market strengthening as it trades higher, and we'll see breadth beginning to come in, and volume beginning to come in as well. And right now we just don't have that. Have a great weekend. I'll pick this back up again on Monday.